Welcome everyone to the weekly live room at binary.com, starting always on Mondays at 8 a.m. UK time. We will be taking a look at live price action and markets together in this webinar. In fact, so looking forward to discuss that with you. But before we do that, we do have this PowerPoint presentation to go through and explain a few items that are needed. My name is Chris, by the way. Thanks again for joining. The risk disclaimer is something that is very important because trading for exchange and global financial markets and products is considered high risk. It also may not be suitable for all investors and traders. So therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer mentioned here in front of you and also mentioned on binary.com. We do thank you for your attention on this important message. So with that said, you can get a recording, by the way, of this live session in case you want to watch again, or if you want to, if you're not able to watch this live session in the future weeks, you can take a look at the recording, of course, by registering with your name and email only at blog.binary.com/weekly trading room. And a few hours from now, that recording will be emailed to you. Alrighty, today's goal, we're going to take a look at the economic calendar. As always, the euro dollar, pound dollar, dollar yen, AUD USD, and then also XAU USD or gold, in other words. Today we have some lighter news throughout the day, but also, actually tomorrow already, the Governor Stevens speaking. Of course, it depends on your time zone, but in Australia that is already Tuesday. And then we can take a look at the rest of the calendar here. We have USD news on Tuesday, Wednesday, official bank rate votes on the pound, and New Zealand interest rate decision expected to go up again, 3.5% this time around, the interest rate. Thursday and Friday, the usual lighter, medium, and heavy impact news. All right, such as PMI and retail sales. Alrighty, with that behind us, let's take a look and start, of course, with our euro dollar. We are first of all taking a look at the hourly chart, and what we had last week was basically a follow through of this correction here, like this, and we've seen downside pressure throughout last week. All right, so there was a bit of a fall here on the euro dollar, and we recently bounced up to the upside. So let's see how far this bounce can go. Personally, I would not be necessarily bearish until we break this bottom and even the 134.50 level. All right, now the reason for that is based off the daily chart. Let's take a look at the daily chart first of all. The euro dollar in general is still remains basically in a very grayish territory, not very clear whether it's bullish or bearish, and it has everything to do with the fact that it broke out of this, as we know, out of this support line, this orange support line. The euro dollar was in an uptrend, although at times very choppily, slowly moving to the upside. The break of that support line was strong with a lot of momentum, but we've just gone sideways for a couple of weeks now. All right, so the market is quite choppy, is quite slow the last few weeks. And with August coming around the corner, there's not a high chance that that necessarily will change within a few weeks. September could be different, of course, and let's see if we get more trending environment. But the euro dollar not showing that as yet. So that's one thing, first of all. The second is that if we zoom in and focus more of the recent price action on this daily chart, you can see how long this sideways move basically has been going here. Look, right? Now, we have a bottom here and a bottom here, and price approached that bottom. Support levels like that, especially in a consolidation, especially in a choppy zone like that, could be support levels. And if we look at the most recent price action right here, what do we see? We see a wick here. That is a candlestick pattern called a hammer. All right, a big wick, a at the bottom of the candle, that means there was intraday downside pressure, but at the end of the day, the bulls took over in a way and pushed price back up. The difference with the candles prior to that were that, definitely very bearish candles. The close was near the low, while Friday's candle was far from that. Certainly a significant difference, considering also the fact that price was using or close to that support level indicated by the green circle. So those two things, right, very important, the wick and the daily support. So we could now potentially bounce off that level and move up to retest this top, just like we did here and here. So that's what I'm thinking at the moment. Now, obviously, if price does push through that daily low, then we're breaking to lower grounds, probably, right? And we would see a fall on this euro dollar and a continuation of that bearishness. And in that regard, the fall hook back to the 38.2 fib means that we could fall back to the or towards the minus 272 target and even the minus 618 target with a 133 horizontal support level in between those two targets. So those would be the potential targets to the downside on this euro dollar. All right, and we'll have to see how price responds and reacts once it gets there, of course. But those will be the potential downside pressure targets. Obviously, if it doesn't do that and we do bounce here, the first target to keep in mind is the 137 top. But if we break that, we have a 50 fib that could be a target, 61.8, 78.6. All of these fib numbers, basically, if we put a fib from here to here, are potential bouncing spots. All right, so that is basically the up and downside scenarios. Other than that, we do have a weekly bearish candle. All right, so keep that in mind. But these candlestick patterns in general, though, especially like a weekly candle, although it's bearish, it closes right at that weekly low, so it doesn't have that same importance as it normally would, in my opinion, at least. Other than that, also, you can see that if we do eventually break below 135, if we do eventually break below 133 and 130, then obviously we're building nicely on the downtrend channel, and all of this could then be turning out to be a rising wedge with the choppy rising wedge that tests this resistance again and is now falling to newer lows. That is possible, but before we assume that, especially 133 and 135, I would say, are two levels that can clearly stand in the way, and 130 obviously. So we have to take it step by step to see if that is true. Alrighty, well, that would be all I want to actually say regarding the euro dollar. Of course, if you have any questions, of course, you have the chat available where you can ask that and we can discuss anything on the euro dollar in more detail. One thing I do want to mention regarding the hourly chart, by the way, is that with that long-term analysis in mind, I on the hourly chart would be interested to see this blue line here about 135.13 here. I think could be interesting because what we could see is maybe, right, this is because it's a smaller time frame, we could see maybe some kind of like an inverted head and shoulders like that. Something like that is possible. So it's something one could keep an eye on a lower time frame like the hourly. All right, now the euro dollar is certainly different than the pound dollar, and the main reason is that the euro dollar, although it had a bit of uptrend there, it broke out of that uptrend already, and it's consolidating. Now, the difference with the pound dollar is that the pound is clearly in a beautiful uptrend. It has already lasted a year, and this uptrend channel in blue lines is indicating that channel and that slope of that uptrend. Beautiful, right? Very nice, good one. Now, obviously, within that year uptrend, not all the time is the currency pair moving up. We have consolidation, we have corrections within that uptrend, right? Extended zones that don't move up, like here we see that, and here, and here, and here, and here. So we could be again in that phase. That's the thing. Where we had good upside was here and here and here. We had, within that zone you have good upside, but you have corrections that are slower to the opposite side. So my point is basically is that we could be having that now. We had a good break of this orange trend line within the blue lines. It lasted nicely. but we see a last wick here, kind of like, now that could be a signal that this uptrend might be having some problems. Now, obviously, if we break the top and 171.70 gets broken, then probably we're getting rid of those problems, and we might be continuing with this uptrend as if there was nothing wrong with it, right? But unless we do that, there is a decent chance, up to substantial chance, maybe. Well, it depends how you formulate it, but let's say a decent chance at least that we might get into a bigger pause within this uptrend. Or if we even start breaking below 170.40, which why is 170.40 important? Because we had a big top here, right? And that 170.40, a 5 year a high from 5 years ago, got broken here, right? So if we then hook back to that level, we had a bounce at that level. So if we break below it, it could be meaning that we are retracing, right? We could retrace back to what kind of levels? Well, we can retrace back to 169 roughly, because that's the bottom of the uptrend channel. Or if we break that, we could even go and retrace back to 167. Why? Because that is a weekly bottom. And that could still be a support level. But if we then break below that, well, then of course things are starting to be very bearish, right? But so yeah, this is basically how you take it step by step. Because above 170.40, we could stay and go sideways like that. If we break below 170.40, we still have support level here, and otherwise still here. All right, so three layers of support, and every time we break one of those layers, the likelihood of a trend change or reversal is increasing. If we don't break it, then what we could see is prolonged consolidation until then we finally probably break the top and continue to higher ground. Okay. Um, Looking at the weekly chart, we had a bearish week last week, and you can see this is that upside that has lasted for a year already. If we zoom into the 4-hour chart, you can see that consolidation now better in a way, and you can see that this has lasted, well, not as long as the euro dollar consolidation, but still already certainly 3 weeks or something like that. So it's an extended period, and we have to see how price responds to this bottom here, and whether there's enough energy here to break above this resistance line, for instance. If it does, we could maybe see a dash up, for instance, to retest that 170 again, right? Before we might bump into resistance again and see a downside. So that's going to be interesting. That trend line, this bottom, that top. Let's see how price responds to those levels. Because although the daily is an uptrend, the 4-hour is certainly going into a consolidation. And let's see, the odd USD. Well, fortunately, kind of the same scenario in a way. Better maybe seen on the 4-hour chart, where you can see the prices been bouncing about between 94.50-ish, with one spike as an exception here. We have the green circle, and the bottom here at 93.30, and price is going to be gone sideways like that. All right, now if we then zoom out to the daily, all right, we can see that all that sideways zone happens within a bigger sideways zone again. All right, so it's quite choppy. The odd USD even more maybe than the Euro USD. So yeah, what can we do? That's just the period of time. Summertime is not known for the biggest moves, and I would say 2014 in general is different than 2013. Less bigger movements. Let's see, maybe the fall will bring a different perspective starting September. Only time will tell, but in general, of course, the odd USD has been falling tremendously nicely here. That was still last year and beginning of this year. Then we still had a nice rise at the beginning of this year, but this consolidation is quite choppy. Now, what could we expect if we do break, let's say, above 94.60-ish, above these tops? We have the green line. I would say that the target of that breakout, with its ups and downs, of course, could target the 88.650. Sorry, the 88.6 fib at 96.30. Could be a level to think about, or eventually maybe even the top at 97.60. A break below support, below 93.20. We could see a fall down to the support level here at 92. And then eventually, if we do break below 92, maybe we see a bigger fall then. So those are the key levels to the up and downside. Uh, Before we really push above or below that, what we have on the hourly could be a descending wedge. We've got a good resistance line coming in here. We've got a good support line. Um, so that could happen, something like this. We could see a fall. Or we might see a break above that, of course, but then be aware of that 94.60 resistance and 95 resistance too. Not an easy environment, really, to look at and to trade. There are some potential trades within this consolidation zone, but mind you, it's a very tight zone. There's not much space from bottom to top, so that is a bit of an issue there. Dollar yen, well, same story, right? We here too have gone sideways like that, and have been traveling to the downside. Sorry, been traveling sideways, excuse me, for quite long. So, what are the borders here? Pretty simple in that regard, indeed. The bottom here at 1080, and well, the tops have more levels to be aware of. 102.50 maybe, 103, 104. Those are levels of resistance, and we'll have to see which one will break. Will we get a bigger consolidation? We'll see a break to the downside eventually, right? Or is this just a retracement still within that uptrend? We could see a break to the upside. But for me to consider really a bigger uptrend follow through, we really need to break above this orange trend line. Not this one, not this one, and not this one. Yes, this one. All right. So we need to break really above 104, 104.20, and then we could be back in that uptrend mode as we were here. Otherwise, if we break below 1080, we could be retracing deeper. But until one of those two happens, we could be bouncing up and down between those levels as long as we like. Again, not an easy environment. If we look at the 4-hour chart, it's starting to look like a bit of a downside pressure on the 4-hour, although the daily is sideways. We could see resistance like that, but you can see downside pressure here. So will price use that support level here as the bouncing spot and then break to the upside to retest to higher 102.5, 103, or is it indeed going to push through? Time will tell. At the moment, it's just big consolidation, and yeah, it's just good to keep an eye on potential bounces here, potential breaks here. Be careful of those breaks though, and potential breaks here and here, but and maybe bounces again at resistances. But overall, it's a difficult environment. Look for confirmation. Look for some candlesticks to get more and a better judgment about what price could do, and be careful about the length of how far price can move, basically, because if it's a choppy zone like that, it might be quite short-lived. This is XAU USD, and price is 2, pretty choppy, right? Double bottom at the blue lines, a resistance line at magenta, and now we have this potential support line like that, where it's orange, support line. So, yeah, there's a lot of things going on here, a lot of breaks, a lot of sideways movements, a lot of ups and downs, a lot of spikes. Not too pleasant of an environment either. And we had a lot of trendline breaks that I'm taking away here. And just looking like a contracting wedge now at the moment when price is retesting the tops, testing the bottoms, and just not getting any follow through here. On the 4-hour chart, we see that we most recently had a bounce maybe at the 50 fib, for instance, depending on how you put that fib on. So this is not a situation that really I find very interesting to trade. If anything, one could maybe look at this trend line here for a break to the downside maybe, or maybe a trend line like this for a break to the upside. So we're having basically a triangle within the triangle. But if we break those lines, be careful. You could see resistance again at the magenta line or support back at the orange. So not much space to the up or downside really, even if you break this hourly triangle or 4-hour triangle, right? So because we are in a bigger daily triangle, that's the point. So not many pairs are trending at the moment. If you're looking for a trending environment, they're really not. They're a bit difficult to find. Um, Maybe you know looking at other pairs, but you can see even the euro odd and pound odd are having its struggles. Um, Even the kiwi is having struggles. It's not difficult. It's difficult, sorry, at the moment to find something that's really nicely in a trending mode. All right, even if I look at the dollar CAD, nothing seems to be in a big trend. So I personally am taking it easier a bit, being a bit more careful with trading, looking for more confirmation via candlesticks, more cautious of breakouts, going for smaller TPs, um, so these kind of things to be a bit more cautious about the current environment. All right. Well, I didn't see any questions, so I guess everything is clear. But if not, let me know. Thank you for your attention. We'll be back next week, 28th of July on Monday at 8 a.m. UK time. And this is the link if you want to get the recording to watch maybe again or if you can't join the live session. I wish everyone a very great week and maybe a great holiday as maybe some of you are taking some time off. And I wish you, in any case, a great week and see you very soon. Cheers.